A closer look at tech and social media stocks and their impact on online advertising into 2024. Our next guest forecasting 11% growth in the online ad industry, naming Pinterest a top pick, along with Meta and Alphabet, just raising his price target for each of those names. Joining us now is Colin Sebastian, Senior Research Analyst at Baird. What kind of signals are you getting, Colin, that lead you to the optimistic growth forecast on online ads?
Yeah, thanks, and good morning. So, really it boils down to the state of the internet sector is quite positive. We're seeing revenue growth accelerate in many cases. Margins are expanding, and there's line of sight to a lot of product innovation. And along with the fact that valuations, at least in historical context, are not really stretched. So that's what keeps us excited about those names you mentioned and others across e-commerce and social media.
It looks like you have a buy on nearly all the stocks that you cover, everything from Alibaba to eBay, Meta, Pinterest, Shopify, except for maybe Airbnb. Is it just a rising tide lifts all boats when it comes to online ads?
Yeah, that's certainly part of it. The reality is we are seeing this year and into 2024 really a resurgence of secular growth trends across digital media, online advertising, e-commerce. We certainly have a preference for the larger platforms. And in a year where there are a lot of macro uncertainties, as you've just been discussing, we do have a preference for the higher quality companies, so those like Meta, like Amazon, like Alphabet. But there is room for companies like Shopify and Pinterest that in themselves, are emerging as higher quality technology and consumer internet companies.
Yeah, where does AI, Colin, factor into all of this, particularly around Amazon? I ask you because one of your peers on the street today over at Raymond James makes Amazon their top pick. They're looking from laggard to leader in terms of AI. It seems like so many other companies are the ones dominating the conversation here, but what about Amazon?
Well, for Amazon, on a broad level, you have that same context. You have faster growth, expanding margins, market share gains in online retail, and recovery in cloud. In terms of AI specifically, Amazon's strengths are fully in the infrastructure layer. And where they lack some momentum is on the application layer. That's where Microsoft and OpenAI have shown a lot of progress. So for the year ahead with Amazon in AI, they need to show more momentum in the application layer, things they announced recently at reInvent. That being said, we still think the stock is positioned really well for 2024.
What does Meta have to do to back up the kind of year that they just had? Not suggesting in any way they're going to, do 200% return on the stock, but to have any sort of outperformance, what has to happen?
Well, first off, on historical levels, the stock trades below its typical earnings multiples. So, I think compounding earnings growth will be enough for Meta. Aside from that, there's still a lot of concern around competition from TikTok, for example. And there we're seeing Reels continue to take market share. Stories is still driving a lot of monetization on Meta. The part that may be less well understood is the fact that messaging, WhatsApp and Messenger, these are emerging as new billion-dollar businesses for Meta. We think that's going to be a major theme in the year ahead and one reason why we like that stock.